Welcome back to the on-chain analysis class for beginners with Eki BTC. In the last lesson, we looked at HODL waves, a powerful way to visualize how long Bitcoin holders are staying strong or letting go. Today, we're diving into a metric that goes even deeper, not in a holding behavior, but into the emotional state of the market itself. It's called NUPL, and it's one of the clearest ways to measure fear and greed directly from Bitcoin's blockchain. Let's break it down. NUPL stands for Net Unrealized Profit or Loss. It's pretty simple. When people hold Bitcoin, they're either in profit or in loss, depending on the price they paid compared to where Bitcoin is now. NUPL calculates the total unrealized profit or loss in the network, simply by knowing when every coin last moved, then expresses it as a ratio of Bitcoin's market cap. So what does that mean? When NUPL is positive, it means most coins are in profit. When NUPL is negative, most coins are underwater. Holders are sitting on unrealized losses. It's like a sentiment gauge. It shows us how good holders are really doing, not what they say on social media. Now, here's where it gets interesting. Over time, NUPL has revealed clear emotional zones across the market cycle. Let's walk through them. When it hits below zero, it means we are seeing capitulation. Most holders are in loss. Confidence is crushed. Panic selling is everywhere. But historically, these are the moments when long-term investors should start paying attention, because some of Bitcoin's strongest bottoms happen right here. It happened in 2011, 2015, the March 2020 COVID crash, and the 2022 bear market. In each case, NUPL dipped into negative territory just before the recovery began. When NUPL rises into the 0 to 0.25 zone, we enter a period of fear and hope. Some holders are back in profit, others are still down. The market isn't sure what's coming next. This is a zone of hesitation. But for those who bought the dip, this is often when the first signs of recovery start to show. When it moves between 0.25 and 0.5, we start seeing optimism mixed with anxiety. Momentum builds. More and more people are in profit. But many still don't trust the rally, thinking maybe it's just another fake out. This often marks the early to mid stages of a new bull market. When NUPL climbs into the 0.5 to 0.75 range, the market shifts into belief and denial. Most holders are now in clear profit. Confidence is rising, but there's still that voice in people's heads saying, "Is this real? Or I should have bought more." This is when bull markets get loud. When it pushes above 0.75, we're entering the zone of euphoria and greed. Everyone is in profit. Sentiment flips to overconfidence. People are chasing green candles, expecting prices to go up forever. But historically, this zone has often appeared just before major cycle tops. So what's the key takeaway? Below zero means deep fear, possible bottom. Above 0.75 means euphoric greed, potential top. Everything in between is just the emotional middle of the cycle. The NUPL helps you understand where the crowd stands, not based on feelings, but based on how much unrealized profit or loss is sitting in the system. It's a great tool for managing risk, spotting opportunities, and staying grounded when emotions run high. That's it for today's lesson. If this helped you see Bitcoin's emotions through data, give it a like, subscribe to the channel, and leave a comment if you have any questions or insights. More on-chain tools are coming soon. Right here with me, Eki BTC.